No, what I was doing that. I was just like, oh, fuck it. Oh, okay. There we go. Boom. Alright, let's get into it. Fuck it. Alright. I mean, this might even be like nobody even flipping shows up, but at least I can make a video out of this and I can edit this. Because I can't like sitting and recording is so aids. I cannot get my mind out. I can't get my thoughts out properly. Gonna have to start, edit, cut, whatever. What screen am I showing? The Discord. Now I'm getting called on my phone. The market makers are after me. See me going live and now they're after me. They're calling me. Let's see what we can do. I don't know if these beats are too loud. Turn down a bit. Alright. Let's go to a random bar just so I can make sense of this. You know what? Fuck it. We'll start now. I'm not going to waste too much time waiting for anybody to join. Okay, vector blocks. What are the vector blocks? Oh, actually, real quick. I don't know how long I'll have to do this because I'll be going out soon, I think. Anyway, we'll get into it. We'll keep this short and sweet. So, establishing a block principle, we want to determine. How do we identify a block? We don't want it to have a huge wick because that will show indecisiveness in the candle, right? So this candle is a good demonstration of what a block would be. So you find it, and this works best on the 5-minute time frame. It does work on higher time frames, but the higher the time frame, the longer the trade will take to play out. So this is intraday. This is day trading opportunities. So it's for a scalper even if you want to really take it down to like the 1 minute, but the 1 minute does get violated pretty fast depending on what's happening. Anyway, this is a random time on the Nasdaq. I don't know really what's going on. Let's change the speed real quick. Okay, so we've identified our block with no wick. The reason why we don't want any wick is because it will show indecisiveness, and we want to see a commitment between sellers if it's a red vector, and if it's a green vector we want to see commitment of buyers. So like for instance, let's draw down here. So instantly off the back you can see that they've started to sell off. There's a red vector coming in. They've come and hit the zone once. They've sold from it. Green vector giving the illusion that prices were going to go higher, but they came into the same block. This is where memory comes in. The reason why I say it's about market memory is the same way they sold off from this point. If they're going to make the way to travel back up, which is the retrace, if they're going to make their way back up to this zone where they sold from, are they going to initiate the selling again? Which they did. Green vector's holding price, moving higher. But they came back into the same range. We're looking for sell orders. You can see price tipping. Let's just, for demonstration, if we were taking a quick scalp, that's the opposite way. Let's say we wanted to take a scalp right from here. Let's put the stop just above this point here, this recent high on the 5-minute time frame, and then we can even have a stop all the way at the low here, whatever. I mean the low of the red vector block. Anyway, we're gonna target these vector candles because that's a point where they could come down and recover, right? So this would be a 6.81 reward ratio if this trade hits. Banging. So how's that for a sniper entry? Like that would have been nice. And come on guys, I ain't got no word to that. Come on, look, targeting the vector points, the imbalances left behind. This came into a vector block. Funny enough, this vector block, the low that they recovered, they've started to bounce from. Let's take a long. I keep going. Let me just put these together so I can see that that's long. So let's say we theoretically had a buy limit order ready, and we just had a 7 risk to reward ratio profit, whatever. Let's say we're now going to target this vector here. Just because, like, when it comes to determining a take profit, you just have to go with the closest place where there is for price to travel towards. This is our recent high. This is the vector candle imbalance. I want to see recovered, and the daily open. So now there's confluence stacking up for reasons for price to travel higher. So let's just say on this block principle, we're wanting the market memory to get activated here, and for it to move prices higher. And yeah, we'll go with that, and then from there I'm going to see if it doesn't, how it reacts in this, and I'll explain it. And if it reacts well and just shifts out straight away, then that's it. Let's see, so we had a buy limit, we're currently in profit. Let's move. Okay, here's one thing, just in the environment, let's draw a box here so we know that this is a point where they could come and recover as well. So we'll have our stop below it. So in this case it's only a 5 risk to reward ratio, but you're gaining significantly more than you would be losing anyway. Okay, so the top of the block is acted as a resistance so far. They've come back up. Is it gonna be resistance again? This is where we want to see the market memory of price. This all here is market memory. This whole huge point here. So we're looking to see if price is going to travel all the way to the upside, which should be in line with the take profit. But right now we only had this one 5-minute time frame. We're going to see if the market memory in this area is going to get triggered and activated to move prices higher. Working their way. Okay. Not stopped out yet. Let's say you move your stop loss to break even. Remember, we're still in the block. There was this point that could come down and get realized before we make the move higher, but we'll just see. Okay. W formation, retrace. When you see an aggressive move out, so look, I don't want to remove everything off my chart, you know, but I'll remove a couple things. I'll move this for now. And I'll draw this box across because that's our zone. This is also a zone that we could see price come to. And then work its way past the daily open. So this is another point here anyway. So when you see a violet vector coming in after a move higher, it's usually the market maker's intention set up to trap traders out. So when you go long here, then you see this drawdown instantly on your account after going long because you see this move here. This vector candle is just effectively them picking up the remaining bids. I instantly think that price is going to continue and recover this vector. Does that make sense? My system is all about recovering the vector candles, and they've now come lower, collected the bids. Market memory is triggered here. They're looking to move higher. If they're going to move higher, they're going to be trapping traders with the false intention of moving prices lower. So look, what's this? False move. They're going to come recover it. Notice how they're holding the low. Sorry, they're holding the high of this block here. Just wait. I'm not being funny, but look how this high point right here of the vector block that we've got drawn off, look how it's acting as support and resistance. They've recovered the wick. So they recovered the wick. Sorry, no, the vector candle. Tripping out. They've come lower. They've not hit our take profit. Let's say we add to this position right here. So let's say we're in once here. We're in twice here. We're saying, okay, they've not stopped us out and they're holding support here. If price comes down one more time, it might be a means to get out and cut the trade completely, because, you know, it's not showing us that, it's not showing us the strength. Anyway, let's continue. We're still in. They're accumulating. What are they doing this, where are they doing their accumulating? Whole number right here, 21,100. Building below. What zone are they holding? The 22,000. Whole number. Accumulation in this range. Remember, we still got this block. Market memory triggered again. Buying. Let's just see. Heavy accumulation. They could break it. Let's just put this line so we know where our stop is. They do look like they want to sell from this point. Look at that. not in terms of block trade principle, but if you were just using this for scalps, you would have made a profit. Let's say you, hold up. You see price come down, test the low of the block, it reacts, you go long, close. Comes down again below the midpoint, you say, okay, I'm going to open again. As you know, you see price holding this range, you take another long, you close at the highs. You see price come low, you see price come respect the higher the block principle. You say, okay, I'll go long in this range. You wait, you see a little bit of sideways action, you realize a return. You see price print this vector candle, doesn't finish strong to the highs, signaling a reversal. Flip me, I can't even say that, I'm not even English. Recovery of the previous highs, and then let's say you open a short from here because you see this vector candle not finishing strong, selling volume coming into the chart. Now they recovered the previous point liquidity, you take a short. You say, okay, I'm gonna go long here again on the market memory being activated, because although it wasn't the true intention, it's shorts now. They're breaking down from the level, so you take a short from here. We'll just set this short up right here real quick. Stop loss above the midpoint. Range daily low target. What's this? A 5 risk to reward ratio. Okay, look at this. We'll just get rid of that now because we don't need that. But the market memory real quick before I move on to this. You see how the market memory is a real thing. The same way they initiated price to move higher here, they did it here, they did it here, they did it here. But they were distributing. They were in a distribution zone phase. Sorry. Let me set this back up. So stop loss above the midpoint here. Entry around here. Just going off where price is currently. You can see M formation, drop, distribution, more selling off. If you haven't watched my recent video, I suggest you go do that because this explains this perfectly. You can see that they're selling red vectors. They're right. Look, they're in a selling move, but you see at the highs they're adding more positions to sell from. They're distributing from this point. Okay, they stop us out. They stop us out. I'm instantly adding another short here. Instantly. Damn. Got that wrong. I mean, I looked a short from here, 100%. They don't break that structure here. You can just see. They failed to break that structure, red vector from the highs. I would be in a short there. You don't always get every single trade right. I can't say for certain that something's going to happen. Like we got stopped out twice there. But that's fine. I'm right the majority of times and I am wrong. So now I've opened a short here. Price has made an aggressive move down. I'm expecting a retrace. I want them to work this zone before they come down. And I'll tell you when I get out of the trade. No way down. You gotta pay attention. Points where they could come to. Recovery. They're gonna bounce from this point now because they've swept the point of liquidity. It might come up to come back down. It's at this point, if I'm still in this trade from up here, I'm looking to add on this retrace. Scalp the higher time frame. Where are we at? Gap to be filled. They're going to come down and recover this. Dropping down. Look at that. If you just move out to a higher time frame and you see this interest coming up in here, but they're not finishing higher. I mean, I was just using the 5-minute time frame. Look at the information you get moving up a time frame. Recovery of this vector here. Failed to move higher. Resistance zone right there, clearly. Drop. Short. We're looking for that retrace and we're adding shorts here. Look at that. We'll just let this run. Might take another short. Resistance line. They break this, we're out. Still in profit from up here. If they break this, we're out. Resistance line. I'm not convinced on this breakout yet, so I'm not in. I'm not out. Okay, never mind. I didn't give myself enough time to react, but I can see this and see how they're reacting in this zone. You see how this resistance line became support? I would have been out at this point. That drop, recovery of the bids, their favorite moving process higher. They've got zones to come up here. We're now seeing, are they going to come back down? Because they got zones up here. I need to get back onto vector blocks, to be fair. We'll get back to it in a second. We're just waiting. Man, Nasdaq's so choppy, man. We'll go back on track. We'll find a vector block. Market memory. If they're going to continue this uptrend that they're in right here on the 5-minute time frame, I want to see them test this and then move higher. Test the intention of where they started the move from. Market memory trigger. We've got a gap that they've come down to fill. They haven't filled it completely yet though. Wait. They basically filled it. Moving higher. Daily support. Are they going to move away from the daily open? Okay. Another vector block. The same way I want them to see here and activate the market memory. If they can come up to this zone and hold in it, I'm looking for them to reinstate the market memory and move higher. I've got another zone here. For the sake of the demonstration, I'll change the color on this one to red so it makes it more easier to see. Move blue. Blue will do. So remember, we've got zones down here that we've got to take into consideration. Boom. Okay. Market memory trigger point. Break above the daily open. They're seeking value, right? From a order flow perspective, volume profile perspective, they're seeking value. They're moving away from the daily open. They've market memory trigger point. This vector candle got triggered. Value. They've broken away from this point of memory. Here we go. I'm now biasing longs right here. But where would my entry be? One more. When you're giving yourself blocks, only give yourself up to 3 because then you're just going to get a lot of things being crowded. This is going to be where my entry is. Let's you know what? You never know if you're right, you never know if you're wrong. Let's just say, let's probe a trade, light size, let's see what happens. Stop loss at the low. Targeting the highs. You stopped out. Maybe give yourself, it was only a light size, so maybe you can enter here. Okay. In this vector block zone right here, you see the trigger point of memory coming in, which is also sat in line with this vector block here. Bidders are coming in, buyers are coming in. So here we go, we've re-entered, we've got stopped out for a small loss on light size, but the profit that we're about to realize on this trade right now is going to cover it and make us more in return. Okay, notice this point, this point right here in the chart of this vector block is acting as a resistance. See what happens. Come down, we're still in profit. Now, okay, market memory trigger point right here. I don't have, we'll just do this. Market memory trigger point right there. Market memory trigger point. This vector block, which was in line with this vector block. This is a market trigger point as well. Market memory trigger point. So we took a small loss We got stopped out because they came to the actual low of this vector. We re-entered, instantly in a profit. They've come down, they've retraced up. So they retraced, they continued. Violet vector comes in, the illusion of selling, reversal, and then gets recovered. Targeting those highs, remember? Look at this, market memory. Low of this block now, is it going to make the bounce? Not stopped out yet, but they're fighting in the zone, so we're just waiting. Market memory getting triggered around this point, they're moving higher. They came back into this block, picking up some more bids before they move higher. Boom, there we go. And if you held it and let that sucker run, almost a 7 risk to reward. The retrace. Look, I've got big enough balls to understand that if price is going to come up, retrace, continue out. I'm looking for the same logic. How am I capitalizing on this? Let's take everything away. From this low to this high, I'm looking for a 50% retracement. Doesn't have to be exact, but here we go. Here's a vector block in the zone right here. Now I'm waiting to see if price can react from. What else do I have? A zone right here. Let's use this as a final zone. See how price reacts. Memory trigger point getting activated right here. I'm waiting. I could have been in early, but you never know. Could come back down. Here we go. Let's say I had a market buy limit from here. I always get it wrong. Always. Let's say you're targeting the high again, and you have a stop loss just outside the range. Here's a previous point that they could recover because it's a wick. Let's just set below it. Remember, the daily open is in sight, so there's a high probability chance that they do come back down into the same range that they were building from down here. You know what? For sake of demonstration, I want to show you something real quick as well here. Remember this vector point? That was a really strong point of resistance. You know what? Let's set a wider stop loss. Wider stop loss. Let's get filled on the daily. Not daily. Let's get filled here on this wick to give us some room. If it doesn't hit it, then we don't get the we look for an entry elsewhere. Okay, we're in, and it's looking like our stop loss might get hit. Okay, we're out. They did target the daily open, but it would have been small loss. It's, you know, you're not risking the house. It's controlled. We're just gonna wait. We're gonna wait. See, that didn't play out, but I haven't considered the environment. I'm not considering the environment. When it comes to making these plays, you also have to consider the environment and where price could go to. Remember, we're not right 100% of the time, but when we are right, we're making significantly more than we are when we're losing. And if you can control your risk appetite and stick to the same rules, then yeah, it's fine. Daily open, and we're looking for a bounce. I'm waiting for more information. They've come down, they've recovered this point, but remember, before I did say there was this point. If they come down to this point, I'm going to be looking for buy limits. The first buy limit I'm going to be looking for is up here, around here. Sorry. Oh my days. Get it wrong. Oh my days. I'm actually insane. Okay, the first buy limit, blah 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 blah, is I'm looking for this. Small loss. They could come down and recover the whole of the range, right? But then I'm looking to re-enter. I can take that small loss because if I get this one wrong here and I get stopped out, and then they come down to the actual low, and then it reverses, I'm still making so much more than I am when I'm losing. So let's look here. I wouldn't even have gotten filled, but look at that. It doesn't have to hit the range exactly. Remember, I'm not trading live right now. I probably would have been in when I saw that pin bar right there, that blue vector at the low, I can't say signaling. Oh my days, what? I would have been here in there most likely, just from it. I mean, I know I'm saying this in hindsight, but if you don't understand it in hindsight, you'll never understand it in foresight, right? The reason why I'm saying I would be in, because this system that I've used just trained my eye to see that and just enter on it. I look for sniper positions. I don't fuck around and wait. That's what people get wrong when they're day trading. Nah, that's what people get wrong when they're scalping. They don't axe. You have to this game. You have to be like a surgeon. You have to be so precise. You gotta be like, you gotta have sniper entries. You gotta just be in when you see your confirmation, and just look at that. If you were in, you don't even have to be in there. Look, let's break this down. 5-minute time frame. You see that on the 5-minute time frame, you're like, oh shit, price could come up. Go to the 1-minute time frame. Data point not unavailable. But at some point in this candle here on the 5-minute time frame, you would have had an entry after seeing that in the 5-minute time frame. You could have entered around here, here, here. Price sweeps the daily open and seeks for value. Random bar. I'm live right now.
Oh, that's so.
Yeah. Just letting you know. I'm recording. I'm doing this just because it's easier to record. And I'm gonna get recording out of it.
Do you want Windows?
Huh?
Do you want Windows?
What do you mean?
I've got Windows on there. I just put Windows on my computer. I had Linux on it, but I was having problems, so I put Windows on.
This is such an L controller.
What do you mean? That is my favourite controller of all time. I'm so happy I got one of these again.
That's why it's an L controller. That USB slot is ass.
Yeah, I'll mod it. I'll put Type-C on it.
Can you actually do that?
Probably. It's honestly my favourite controller of all time. I'm so glad I've got one.
Fair enough.
My PS4, I fucking hate the PS4 controller. Can't lie. This is just fucking... This feels so good.
It is nice.
This can't be beat. You can't beat the feel of one of these.
I mean, I still fuck with Xbox 360.
Yeah, the 360 was GOAT, but this you can't beat the feel of.
No.
Everybody knows the best pipeline is PS2 to Xbox 360 to PS4 to PC. That's the GOAT pipeline. You know, I might steal this.
Still what?
This.
Yeah, fuck that. You know how much it cost me?
How much?
£70. No, 56 actually.
I got a whole PS4 for that price.
Did you actually?
Well, it was £100 for that in the game.
No way days. Bitch, hasn't it? You got. Oh. TOS. Nah, this ain't Twitch. I'll say whatever I want. So. Oh my days.
Fine, you're black.
Yeah, absolutely.
I can't believe you can drink out of this. I was gonna have some. Drinking out of it like a bit.
You can have some if you want.
You've been going.
I've just been slurping the top of it with my flipping lips. In a bit. Ugh. 2 secs, let me look at something. Yeah. Alright. Okay. Here we go. Daily open in sight. Red vector, green candle formation. They're holding the range. Bid. So you can see when they drop price aggressively and then they recover the same vector, they're holding the range. Range daily low. So they've already made a full move to the downside for the day, based off what they typically could do, which is the ADR. But I can explain that if you want me to. We can go over that in videos, whatever. Anyway, daily open. We're trading into the logic of the daily open now based on what I'm seeing. I'm going to see if they're going to come down. If they break it, then it's fine, but I'm waiting first. No entry yet. Okay. I don't get... It's not about getting the perfect entry, but it's about your stop loss and your risk management. Let's go in. Let's see. We've come from a down move. Holding the range. Previous support from the zone. If this trade doesn't work out for me right now, then it's fine. Let's just target these wicks where we want to see get recovered. I'm giving this stop loss room now, but you know, it's a 3.63. I can't always get the best entry. I would have had a killer flipping entry round there for a 10 risk to reward. if I was taking a trade. But I was waiting. I want information. So unfortunately, I've got this. I mean, you know, if you want to be a prat and mess around for a 7 risk to reward ratio, this trade might hit now. You might get that full risk to reward ratio, but you're giving your stop loss no time to roof. So close. But I bet people would have closed there, not even on the stop loss, because they set these too tight of a stop loss. I would have had my stop loss below this point. Boom. You would also enter a short up here. You know you would. They've just recovered a point of liquidity and they've made such an aggressive move. You know they're going to pull back. If you can make so much money in this game if you're not a flipping idiot and you just take this serious. You take your entry down that green vector. You see price ride all the way up here. You make such a fat return. You say, okay, look how wide those candlesticks were. They're screaming a retrace. You open a short. You make the same money. You make the same amount of money you did here again straight away just by being a fucking smart ass. Then what? Look, you take a long here because they've wicked it. They've come back into a point. You take another long. How much money could you made on this day? How much money? It's mental. There's always an opportunity. Always. Gap down. We're looking for this gap to get recovered. Look, we'll draw a box in this entire gap. We're looking for them to come up to the daily open at least. Maybe they might sell from it because there's a red vector candle here. So we've got a block and we've got a gap. Daily open in sight. We're looking to see if they're going to trade into it. They're moving up. I don't have a reason to get into a long right now. There's not enough information. What day? This is 1 in the morning. This is age. I'm not even up. I'm not even trading right now, so it's not realistic. So I'll let it play out. Where we at? 3 o'clock. When do I wake up? 4 o'clock. Here we go. They're moving away. Same day. 6. I'm not up yet. I'm probably still not up at 7. I'm up at 8:55. I see this. Okay, look. Where we at? 1 hour time frame. I see this huge wick. Oh my days, look at all this that can get recovered. They're breaking away from the highs, but also they've got this point up here and this point up here that they could recover, and they're not recovered the full vector. There's also this point up here. There's so much liquidity higher for them to come up to, and they're moving away. W formation. Are they holding the zone? Okay, fuck it. Let's take a long. W formation. Rise, retrace, continuation. Shatter out. Break all this liquidity. Let's see it. I think that this red vector block is going to trigger more bids than it is going to be, more offers than it will bids. What I mean by offers, I think they're going to offer out and move prices higher. They're going to be selling higher. W formation right here. Look, let's just take the trade. Long. Here we go. Flip it. Look how much I'm about to make on this trade right now if I get it right. Stop. 8.6. Let's just, I will re-enter if it goes low if I have to. Look at that. Right there. To a T. Look where that candle ends. Right there. They come up to the gap. They're not finished yet. We're maybe looking for a re-entry. No, I mean, we ain't got stopped out. Okay, green vectors instituting. They might be moving when the prices are. Let's wait. This is difficult. Okay. We're in a very marginal situation right here. Very, very, very. We want to see price move higher from this point. Look, if we get stopped out, I'm back in. Let's say I took profits there. Who knows? Because it's like I'm saying. You see this wick, and then you're like, oh shit, they haven't recovered the whole gap, and then, you know, it's different when you're trading in the zone live. I might have taken a profit there. I've expected a retrace from the W formation. You're expecting a continuation, but prices come lower, so we're waiting. We're just gonna keep this point here anyway. Okay, I see price moving higher. Okay, here we go. Long, another long. I've added. Oh, that's the VWAP. I'm in here. I see this green vector print. I'm already in here, and I'm about to make so much flipping money. So much if it goes up to my take profit. Very marginal. Okay. It's at this point where I say I might be taking a small loss because I added here and my original entry was here. I'm at a very small loss right here. Let's keep the stop loss tighter because I don't want to risk price coming down such aggressively on me that I lose a lot of money. I'm still only losing a small amount of money. Okay, alright, fine. You see how we managed the trade in between the whole thing? Haven't lost a crazy amount. If I took profits there, still be in a lot of profit. Remember the environment? Where have we come from? The logic suggests picking up more bids before we move out. I just need reasons as why. In structure in structure, I just need to see price. Okay. I'm waiting for them to recover this vector. You could have a vector block principle right here. There was commitment of traders. Look how much commitment there was in that block right there. I'm looking for the memory to get triggered. Are they going to hold in this zone? Trigger the memory at these points to initiate price to move higher? Or is the high of the block going to be the initiative? They come up, test the high of the block, and move higher. I was just about to say before that candle printed, I'm going to take a long here because I see him holding it. Dead ass, I swear, before that candle printed, I was about to say, okay, look. Green vector come in. Red vector selling, giving the illusion. I'm in. Here we go. 10 risk to reward, I'm telling you. Let's get it. Okay, this. Look, I don't like this right now. You see how slow they've grinded up on low volatility? This is Asia, to be fair. Recovery of a point of liquidity. Recovery of a point of liquidity. There's points they could pull back from. But I'm looking for them to come higher. Let's say I see this red vector and it gets instantly recovered. I'm looking to add from this point, but they're coming down now. Okay. Daily open test. I might be buying here. And I'm in for a small loss if it happens. And I'll move my stop loss tighter. Okay, I get filled at the daily open. Bigger W formation forming then. Alright, we're looking for a re-entry. Keeping the losses small. Vector block right here. Initiating the low. Okay. I am doing like really big risk to reward ratios right here, just because I want to show you how the entries can be. Where are we right now? What day? 17th of April 2025. They cap down. Initiate the block again. Your re-entry. Are they going to sell from this point? Daily time frame. They might be looking to come down then and recover this wick. You know, let's just go back to the block trade principle, because it's being a bit pain in the ass right now. I mean, PR on the Nasdaq is a bit shit, because look at this. Up, down, chitter chatter, bang, bang. Comes up, comes down, comes up, comes down. No direction. you basically have a whole ass block in this zone. You're looking to see how price is going to react within this high and this low, this vector block. If they're going to initiate the memory to come trigger prices higher, drop, sweep, green vector initiates. You take a small long from this point. You close off when price recovers a point of liquidity. They don't do it. They don't do it straight away. You see how they pull back. They come up. You'd be out. You'd still be in profit, but you see that, okay, it doesn't look like they're going to make the full return on profit. Let's say you see 1 point of rejection, 2 points of rejection, 3 points of rejection. They're not breaking this point of liquidity just yet, which is this point right here. They're not breaking that. Why? So you take a probe short from around here. You see this pin bar. You say, okay, I'm gonna go short here and exit here when they sweep a point of liquidity. You say, okay, they come back up. Logic would say if they're gonna move prices high now to come back up and test this point, you're waiting to see if they're gonna come up, test that low, which was support this whole zone, looking for entries here. Price moves higher. You could be in around here. 1, 2, 3 hits down by the market makers. Red vectors pushing price aggressively. You see these pin bars. If they were pushing prices, if they wanted to push prices lower, but they weren't finalizing and committing all the way to the downside with the candlesticks, then you'd be like, okay, something's about to change. You see this green buying volume bar come in, blue buying volume, you know something's about to change. You go long here, you exit here because they recovered the point of liquidity. What do they always do when they recover big points of liquidity? They pull back. So what can you also do? Open a short, bang. I'm gonna have to end there because I need to go do some stuff. But yeah, this is the real shit, boys. I'm telling you. Anyway, I'll do more.